I believe I could fly. Woo! I believe I could touch the sky. Let's see what we can touch today with a little options screener action. The first screener that I would like to build right before your very eyes is going to be dividend based. So let's go to the filters, take off the call. We're just doing the puts again today as far as the filter is concerned. Let's add the weeklies into the equation and then get to our friend's market cap. We'll put the market cap screener in and a minimum of $1 billion. Also, return. We're going to go with our conservative return on the dividend. Add that screener and let's do 12%. Now, I didn't spend any time researching why my numbers come in a little different than bar charts numbers regarding annualized return. So, I mean, they got bid plus dividend. Ah, is that it? Is it plus dividend? Is that what's throwing me off? I don't know. One of these days, hopefully very soon, I will determine why bar chart has a different annualized return on most of these numbers that I'm running. And we'll do a couple of them live right now just to see if that theory holds up, that my annualized returns, according to the abacus, are different than bar charts. But we'll do that live. We'll do it live. But let's also add the dividend in here. So annual dividend yield, and we're just going to go from 0 above. So add that screener in, and we go low, medium, high, and very high. And then we'll run the results and see how many we come up with. So it's 123 trades. Now, that doesn't mean there's 123 ticker symbols, because as you can see, we have Alcoa and Apple, Arbor Realty. There's a couple plus of each of those options, several Citigroup, and there's one that I'm definitely looking at is the Caterpillar. And we talked about it the other day. Part of, I think, what it is this. So, no, it's not that. You're confusing yourself and your friend at the same time. Definitely want to look at Caterpillar. We talked about it the other day in that I was going to look to Caterpillar on the ex-dividend date. So that is today. And to see if the old dividend theory holds up, that your stock is typically going to go down at least the amount of the dividend. So $1.20 is what it should be down, and it's down almost 3 times that. So is Caterpillar a good candidate for selling puts? I believe the answer is yes. Not only that, is when I had them up on the earnings. Are they still there? Yep, they are. Okay, so that's part of the situation. We'll be trading into earnings. So if we are going to sell puts on Caterpillar, the idea in my head at this very moment will be to trade them today, expiring on the 28th, which is next Friday, but then getting out of the trade before earnings. Now, I don't know. You could be shaking your head like, don't even think about it, Bart. I know my friend Brian says never to trade in the earnings, and most smart people say the same thing, but I've never been confused with being smart. So we'll look at Caterpillar because, again, worst case scenario is I take possession of that stock, right? I take possession of that stock. They pay me their dividend, and they're like the dividend kings. I don't know if they're actually dividend kings. Let's find out from our friends over on the Seeking Alpha. What's the cat? How many consecutive years have they paid a dividend? Dividend history. So they are dividend aristocrats. They've paid 33 consecutive years with 29 consecutive years of dividend growth, and the sector median is 2 years. So we got that going for us. And look, those propeller heads, the quantitative boop, boop, boop robots over there, they say Caterpillar's a strong buy. I think Caterpillar is a great company. It's down today, and going into earnings, we could catch some more volatility than what is normally the case. So back to the screener, I'm going to, so that, let me pull up the annualized return as I like to do for sharing this document with you. So if we go to filter view, it's going to show me that annualized static return, and then I'm going to shuffle these around so it's going to go from low to high. So there's our caterpillar. Are they on there more than once? Got some nice ticker symbols on here that we're interested in for sure. For shizzle, my dizzle. Always just entertaining yourself, aren't you? Well, somebody has to, and I'm in my head. I'm in my head all the time. And it's kind of it's a scary place to be, but also it is very entertaining. As I told you, I've got two superpowers in life. One is I don't suffer from FOMO. In fact, I have a philosophy of LOMO, so I don't have the fear of missing out, and I do have a philosophy of the love of missing out, LOMO. The other is I just never get bored. I never get bored, and that's truly a superpower from what I know from the average Joe on the street. So Caterpillar, definitely their kiss is on our lips and their trade might be on our list. But look, we got ExxonMobil, Caterpillar, Nvidia, even some Apple action to consider. Citigroup, I don't I don't know if I'm interested in Citigroup today. Schwab keeps staring me down, so we might look at Schwab. Taiwan Semiconductor, I don't think so. Don't think so. If their price gets in the 70s again, I was trading them earlier in the year when they were dipping into the 70s, made a few dollar bills on them. Verizon, no, I'm not doing that because I just almost got burned by AT&T with their earnings. Was able to, if you watch the previous video from earlier today, I was able to close the $18 puts that I had on the table. Had no idea that AT&T was going to bounce under $18 in just a couple of days, and they did that. So there's another lesson learned with regard to messing with earnings, because now you're messing with the earnings report. Blizzard, Activision Blizzard, Microsoft, Energy Transfer. We're a big fan of Energy Transfer. We have a bunch of shares of that. Well, 1,000. I think I have 1,000. So yeah, we have a lot of things to look through. There's our friend Blackstone. I'm not interested though when it's at 90 right now. Now I could miss the boat for the next several months on Blackstone. I thought their revenue section of their earnings report was shockingly scary, but apparently the market doesn't feel that way. What are they doing right now? What's the Blackstone doing? We know we like the company in general, but they said they weren't able to sell off some of their assets that they anticipated they would. So what I'll do, knowing Blackstone the way I do, I'm going to let it continue to drop because it went up. If you look at the last 5 days, you see how it shot up. So it was trading in the mid 80s. In fact, it got even lower. If we go to the 1 month, if you look at April 5th, it tried to dip into the 70s. It was at 79.57 during the trading day on April 5th. And then it was like bloop, 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 bang, went all the way up to 93.78. And I've watched it very intently over the last few months now. So I'm gonna allow it to continue to go down before I start selling puts again. Because currently we own no shares of Blackstone. We got them called away probably 2 months ago at a tidy little profit. And we have closed all of our put positions and we closed those at nice profits as well. So I'm going to allow it to come back down. It gets back down in the mid 80s or lower, or for sure, especially if it gets down in the low 80s, which it easily could do again soon. Then we'll be interested in selling the puts on the Blackstone again. Back to the board. So we'll continue to look through that. I'm going to share this. I'm going to share this with you now, this spreadsheet. And before I before I do, let's head on over to the Caterpillar on the Robinhood just to see what kind of action. Now remember, April 27th is earnings date. So this could be very risky. Could be a very risky trade, but it's going downtown to Chinatown today and it can continue to do so. So I don't know, but I think it's going to bounce even before the day is over. We may see a bounce. It's already bounced right here in what? 9 minutes. It went from 217.93 to 218.26. If we looked at trading it just 1 week, we should have some pretty good math on the kitty cat. Wow, bad kitty. 7 days out. Holy moly. Holy and the moly. Wow. We can get fairly conservative and still have some nice annualized return action. So even if we went down, let's look at this 207.50 for instance. Okay, 207.50 paying a buck 62 as we speak, $1.62 divided by 207.50. That equals 7.8%. That isn't right. How could that be right? No, that equals just under 1%. So in 7 days, so divided by 7 equals this multiplied by the annualized. So that's a 40% annualized return on a very good stock, very good company at a 20 delta, right? What was that implied volatility? And very high for Caterpillar is that 46% implied volatility. Now, because the volatility is going to remain high through earnings, we may not have our normal chance or opportunity to sell for a 50% or more in the profit. But my thesis is I think it still will. Even by Monday, maybe even by the end of Monday, we'll be able to get out of this trade. That's the fun of recording these without editing, uploading them without any concern for, eating humble pie, because I want to be able to talk these things out loud with you, show you what I'm doing, whether they're right or wrong, learning from my mistakes as I go, and then hopefully getting just a little bit better over time. And just like the wealth snowball is based on compounding, so is hopefully my knowledge of trading stocks, options, and collecting dividends. It will be compounding. So let's look at this right here, 1 week out, collecting a buck 69, $169 bills on Caterpillar. Maybe, well, for sure more. Let's go 173. How about that? A buck 73. We should definitely, or not definitely, but hopefully we can fill that. We got a collateral of 20,750. And that did fill. So now we can do the exact math on its current trade. Okay, let's move this down so we can see our 7 days right here. So now we did collect $173 on collateral of 20,750. Okay, so now we've bumped it up to the 8.3, and what were we at? The 7.8 or 7.9? Divide that by the number of days, 7, and then annualize it by multiplying by 365. Now we've gone from 40% to 43% annualized. And that, of course, is our Fantasyland math based on this exact scenario, this delta, this time frame, this volatility, all of the above. So results may vary, and they do. But what we'll do again is we'll look to close that as early as Monday afternoon. If we're at 50% plus profit already by Monday, because we're going to collect all that theta over the weekend, we'll do it. We'll do it live. So I'll attach the spreadsheet that we just looked at, this spreadsheet right here. I'll download that for you and then attach it to this video, and I'll keep combing through it, and then we'll get our 20% put scanner on the board as well and see if there's anything interesting there. I'm mostly interested in dividend stocks today as far as my mood because Tesla tried to scare the pants off of me with that credit spread that I had on the board. And if you watch the previous video, I was lucky enough, I was lucky enough to close that at nearly full profit. So we got that going for us. In fact, let's look to see what Tesla has done since then because we were close to 164, I want to say. Was it once? Yeah, so it's still there. So I could have likely just let it go all day and it would have just expired at full profit, but I didn't want to watch it go up and down all day. I mean, look what it's done. We traded it out. We closed it in this time frame. I mean, that's Eastern time you're seeing there and I'm Central. But then it bounced down right after that. So I would have been shaking in my boots. We got out of that trade. I'm good with it. So that's why today my psychology is feeling way more comfortable with our friends, the dividend paying stocks, but we'll still run that 20% put scanner just to see if there's anything that we have to consider today. Because I do like making trades on Friday. It's because you collect that weekend theta, which works for us. If the trade's going in the right direction, the time then is ticking, ticking, ticking into our pockets. So there we go. Thanks for tuning in. Make sure you are a subscriber, like the video, leave me as many comments as you like, as long as they are lovable, and I'll see you in the next video.